Hi, good morning, everyone. It's Louisa. I hope you guys are doing great. Excuse me. It's been a minute since I have created a video for you guys, but I took a little break over the summer. I hope you guys all had a great summer, but now it's back to work, and I'll be creating more videos for you guys on a number of different levels. Over the past 5 or 6 months that I have been absent, I've been working on my model, and I have a model that's working really, really beautifully for me. So I will be doing a video just on that. But I want to take you through today's trade. It was 88 points and just shy of a 5 RR risk to reward. So it was a nice clean trade. It's my model. It's exactly what I was looking for. So let's jump into what I was looking at this morning and why I took a long position. Now we're going to start on the 4-hour here. You can see that the market has been in a market maker sell program on the higher time frame. So we can see that price has been coming down every day. That's been the pattern. So although I was in my mind, I was thinking that I would be looking for a short today, one of the things that I'm very mindful of is, although I have a framework for a trade in mind, I'm never married to that framework. I trade what the market shows me, what presents itself to me, and just to remain, agile, basically, on any given day. So on the 4-hour, we can see here on the side of my screen, these are 4-hour candles. I like to have the 4-hour time frame up here. It's just an indicator that I use. I'll link it in the description below. But this helps me to see on the bigger time frame what price is doing without having to flip back and forth between charts. So I will link that in the description below. So let's go to the 1-hour time frame. So again, here we can see that we have been in a market maker sell program. This blue area here is a fair value gap on the weekly time frame. So it's a significant, important fair value gap, and these are the types of things that I like to put on my chart on the higher time frame, because it gives context or framework to trades. If you're always on the small time frames, you're going to miss the bigger picture. So let's go down to the 15-minute now, and let's take a look at what happened overnight. Now these dark things on my screen here, I'll be covering those in a future video, but these are basically 90-minute time frames or time cycles, and my trading model is trading time and then price. So ICT always says that time is the most important element, and I hope you guys can't hear my dog. And so I'm looking for time first and then a price setup. When those two criteria align, then there's the possibility of taking a trade. What was interesting to me last night is that Asia trended instead of ranged. I prefer to see a range where liquidity is engineered above and below Asia. But when it trends like this, generally speaking, in my experience, when I see Asia have a long run, either down or up, usually manipulation is delayed. So I wasn't really anticipating a trade this morning, but as it turned out, there was quite a nice trade. So Asia trends down, and let's go down to the 5-minute time frame just so we can get a slightly better view. So here again is Asia, so it trended down. Then London accumulated, and then at 5 o'clock a.m., London made its final low, and from there, price started moving up. So early this morning, between 5 o'clock and 8:30, which is a time that I generally don't trade. I just like to watch the market. You can see that price came back up. So when price opened at 9:30 this morning, I was watching to see if it I was watching to identify where manipulation was going to occur. So make this a little bigger here. So once the market opens at 9:30, I'm waiting for a sweep of liquidity. So I had my eye on this London low. I also had my eye on the AM high session here. And then, of course, Asia high would be a target. So I'm patiently waiting. I don't take a trade until the macro begins. My macro begins at 9:45 to 10:15. And so ideally, I'm waiting for manipulation to occur somewhere around that time frame. My dog here is trying to get my attention. So let's go down to the smaller time frame so we can just get a bit more detail on what I saw this morning. So here is 9:30 when the market opened. So right here, make this a little bigger for you guys. Here's where the market opened, 9:30. And we can see that price immediately came down and it did not take out London low, which was interesting. Now, even though all you can see is one screen here, when I'm trading, I have multiple screens open. So I'm looking at ES and YW. And I want all three of those to be moving in the same direction. So that is something that's important to me that you might not be able to see on this chart. So price comes down and it swept where it took this liquidity here. And I'm going to make this a little bit bigger again so you can see right here. So you can see this line here. We swept liquidity, so price came down. So we swept all of this engineered liquidity, but we did not take out London low, which was a little suspicious to me. So now let's go down to the 1 minute and we get more detail here. So price came down, and the next thing I'm looking for is a change in the state of delivery. So for me, on the 1 minute, a change in the state of delivery is this set of down close candles here. So for a change in the state of delivery, I would need to see price come above here. So here's my change in the state of liquidity, change in the state of delivery, excuse me. So price came down, did not take London, and it came above the area, the level that I identified as change in the state of delivery. So that was significant. Now that doesn't mean I'm going to jump into a trade at that point. I'm looking for other confluences. The other confluence I'm looking for is I want to see an inverted fair value gap. And so between this candle, and this candle, these three candles here, I have an inverted fair value gap. As well, I have a fair value gap on this side of the curve. So we have the sell side of the curve, and then we have the buy side of the curve. Because we have two overlapping fair value gaps, this becomes a balanced price range. So I'm just going to put this in for you here. So we have an inverted fair value gap plus a fair value gap equals a balanced price range. That is one of the key signatures of my trading model. This also gives us a breaker block, and this is another key signature of what I'm looking for. So we have a low, and we have, whoops, we have a low, then we have a high, then we have a lower low, and we have a higher high. So this gives me, in my model, this gives me a bullish breaker. Okay, what else are we looking for? So we can also clearly see that price was in such a hurry to move in an upward direction that it left these very large candles. This is a very good sign that price wants to get somewhere in a hurry. This is what I characterize as displacement. I want to see displacement, candles moving, price moving in a direction with speed, so with velocity. And that's exactly what we got this morning. So now let's talk about the entry. So my entry, and I'll just light this up for you so you can see where I entered. My entry was here. So price is moving up pretty quickly, and then price comes back down and retests or tests the change in the state of delivery. This is a very good sign. The next thing I'm looking for, again, is I want to see a really strong indication that price wants to move up, and this candle gave me exactly what I was looking for. Now, ideally, I was hoping that price would come down to this fair value gap here, because that would have given me a better entry. But if I had put my entry here, a limit order here, what I'm risking is missing out on the trade. And because price was in such a rush, we can see by these long candles, it was in such a rush to get to its next level. I decided to enter here when price came back to the change in the state of delivery. Now, where would my stop loss go? Ideally, if you want to be super, super, super safe, I would put my stop loss at the midpoint or the consequent encroachment. The first fair value gap, this first fair value gap here. If price wants to continue higher, it should not come back to, it should not actually, I'll be very specific here, it should not come back to this is the last down close candle that started this this move higher. So price should not come below the change in the state of delivery. But if you want to be super, super safe, you could put your stop loss down here. I'm also very mindful, it's non-farm payroll week, that we get a lot of wicks. And I hate being wicked out and then having price move to, you know, where I think it's going to go. So here's my stop loss. And then you can see it was a very, very, very simple move up. Now, what was my terminus? Well, my first level would be London high, AM high, London high, and then stretch goal of midnight. Why midnight? Midnight is a really important level on charts, and I want to buy below midnight or sell above midnight. So based on the fact that we've been on the sell side of the curve recently, I knew that the midnight was going to be a pretty big stretch. So I took a partial, my first partial here, and then like I say, I was hoping for it to, anticipating for it to go up to midnight, but I ended up just exiting the trade here because price was showing some weakness. So, and yeah, so that's that was the trade for today. You guys can see that it was 88 points. It was a 4.3 risk to reward. And once I finish the trade, I'm done for the day. And hopefully you guys, when you finish your trade, you'll close your computers and go and live your life, because that's what we're supposed to do as traders. So anyway, I just wanted to share this morning's trade with you. I will be, I think, I'm not ready to go live yet with my trades, but I think from here on in, I will video them and record them, and then you'll be able to play them back as well as have an explanation by me in terms of why I took the trade. Again, I'll be putting this indicator in the description below, so if you guys want to have the 4-hour candle on your chart, you can also program it. You can just open it up and change it to, you know, the 1 hour. You can change it to 30 minutes. You can change it to basically what, you know, whatever time frame you want. So if you're a scalper, you know, I might put it on the 1 hour time frame. I'm a day trader, so I open and close my trade in the same day, but I'm looking for the longer runs. That's the type of trading that I do. I'm not really a scalper, although from time to time I will scalp. So I will put this in the description below. I also want to show you that when you open this indicator, it's going to be a little bit close to your price action here. And if you click on Start Offset, you can change how close or far this candle will come to your price action. So you can see if you have a small number in here, it's coming close to your price action. And if you go with the larger number, it moves it away. Gives you a little more space. So if you're working on a mobile, you know, you might want to have this a little closer. But anyway, you can play around with it. You can play around with the colors. But this is just a nice way that you can see the next price level without having to be jumping between charts. So again, I want to reiterate that when I am trading, I am looking at ES as well. Okay, so and I'm looking at the SMTs. But anyway, that's the trade for today. 88 points and 4.4 or 4.5 risk to reward. So anyway, you guys have an awesome day, and I'll see you later this week. Okay, take care. Bye for now.